Hey coin cruisers, Guy here. Welcome back to another thrilling episode where we dive deep into the ever-exciting world of cryptocurrency. The crypto market is a wild ride, and lately it feels like we're strapped into a roller coaster with no brakes. Just when you think you've reached the peak, the bottom drops out from under you. Prices are soaring to new heights one minute, then plummeting the next. It's a constant up and down, and it can be hard to keep up with the rapid changes. It's enough to make even the most seasoned investor feel a little queasy. The uncertainty can be overwhelming, and it's easy to get caught up in the emotional highs and lows. So, what's going on? Is the bull market finally over? Or are we just experiencing a temporary dip before the next big surge? Let's dive in and find out. To understand the current state of the market, we need to look at a few key factors that are influencing these dramatic swings. Remember those heady days of 2024 when Bitcoin smashed through its all-time high? Good times, right? It felt like the sky was the limit, and everyone was eager to get a piece of the action. Well, hold on tight because we're in for a bumpy ride. The market has changed a lot since then, and it's important to stay informed and prepared for whatever comes next. The truth is, the crypto market is notoriously volatile. It's influenced by a wide range of factors from regulatory news and technological advancements to macroeconomic trends and investor sentiment. Big swings are part of the game. It's not uncommon to see double-digit percentage changes in a single day, and that can be both exhilarating and terrifying. But understanding the forces at play can help you navigate the turbulence and come out on top. By staying informed and keeping a level head, you can make smarter investment decisions and ride out the storm. So whether you're a seasoned trader or a crypto newbie, remember to buckle up and enjoy the ride. The crypto market is full of opportunities, but it's also full of risks. Stay vigilant, stay informed, and most importantly, stay calm. Thanks for tuning in, coin cruisers. Until next time, keep your eyes on the market and your hands on the wheel. Happy trading. Let's talk about Bitcoin, the king of crypto. This digital currency has been the talk of the town for over a decade now, capturing the imagination of investors, tech enthusiasts, and even the general public. From its mysterious origins with Satoshi Nakamoto to its current status as a household name, Bitcoin has had quite the journey. It's been a roller coaster year for the OG cryptocurrency. The market has seen wild swings with prices soaring to new heights and then plummeting just as quickly. It's a ride that can be thrilling and terrifying all at once, much like a roller coaster at an amusement park. We saw Bitcoin hit a new all-time high in early 2024, topping out at over $73,000. This milestone was celebrated by many, with fireworks lighting up the sky and investors rejoicing in their newfound wealth. It felt like the sky was the limit. Euphoria was in the air. People were talking about Bitcoin at every social gathering, and it seemed like everyone wanted a piece of the action. The festive atmosphere was palpable, with celebrations happening in parks, markets, and even on the streets. But what goes up must come down, right? Just like a roller coaster, the highs are often followed by lows. The market started to show signs of strain, and the once euphoric mood began to shift. Storm clouds were gathering on the horizon. Bitcoin took a tumble, shedding a significant chunk of its value. Investors who had been riding high were now feeling the pinch, and the atmosphere turned somber. People were glued to their phones, anxiously checking the latest price updates and wondering what had gone wrong. It's enough to make anyone sweat, but hold your horses before you hit the panic button. In times like these, it's important to take a step back and breathe. Remember, the crypto market is known for its volatility, and these kinds of fluctuations are part and parcel of the game. These kinds of pullbacks are totally normal in the crypto world. Seasoned investors know that the market moves in cycles, and what goes down often comes back up. It's a time for reflection and strategy, not panic. Bitcoin has a history of boom and bust cycles. If we look back over the years, we can see a pattern of dramatic rises followed by equally dramatic falls. This isn't the first time Bitcoin has faced a downturn, and it likely won't be the last. This is just par for the course. Just like in golf, where you have good days and bad days, the crypto market has its ups and downs. The key is to stay focused and not let the short-term fluctuations distract you from the long-term potential. The real question is, where does it go from here? As we look to the future, it's important to stay informed and be prepared for whatever comes next. Whether Bitcoin will soar to new heights or face more challenges, one thing is certain: the journey is far from over. Now, let's shift gears to Ethereum, the second largest cryptocurrency by market cap. Ethereum has also seen its fair share of volatility, and it hasn't quite kept pace with Bitcoin's gains. Despite the launch of the highly anticipated spot Ether ETP in July 2024, Ethereum hasn't quite lived up to the hype. But don't count it out just yet. There are signs of life in the Ethereum ecosystem, institutional interest is growing, and developments like Ethereum 2.0 could be game changers. Remember all the buzz about the spot Bitcoin ETF? It finally launched in January 2024, and the crypto world went wild. Billions of dollars flowed into the market, and many saw it as the catalyst for a new bull run. And it did give the market a nice little boost. But here's the thing, the ETF effect hasn't been as explosive as some predicted. Don't get me wrong, it's a big deal. But it's not the only factor driving the market. We've got to look at the bigger picture. Section 5. The Fed and the Markets, a delicate dance. Speaking of the bigger picture, let's talk about the Federal Reserve. The Fed's monetary policy has a huge impact on all financial markets, including crypto. When the Fed raises interest rates, it becomes more expensive to borrow money. This can slow down economic growth, and that's not good news for risk assets like crypto. On the other hand, when the Fed cuts rates, it can stimulate the economy and give risk assets a boost. Keep a close eye on the Fed's moves because they can send ripples through the entire crypto market. Section 6. Government spending, fueling the fire. Government spending is another crucial factor to consider. When governments spend big, it can inject liquidity into the economy and potentially fuel asset bubbles. But excessive spending can also lead to inflation, which erodes the purchasing power of fiat currencies. This can make crypto, often seen as a hedge against inflation, more attractive to investors. It's a delicate balancing act. Section 7. Geopolitics and Crypto: A New World Order. The world is an unpredictable place, and geopolitical events can throw a wrench into even the most well-laid plans. Wars, trade tensions, and political instability can all impact the crypto market. For example, some experts believe that the ongoing conflict in Ukraine has contributed to the recent volatility in the crypto market. It's a complex issue, but it's clear that geopolitics will continue to play a role in shaping the future of crypto. Section 8. Sentiment and Predictions, Reading the Tea Leaves. So what's the overall sentiment in the crypto market? Well, it's a mixed bag. Some analysts are calling for a continuation of the bull market, citing strong fundamentals and growing adoption. Others are more cautious, warning of a potential correction or even a bear market. The truth is, nobody knows for sure what the future holds. That's the exciting and terrifying thing about crypto. Section 9. Strategies for Survival, Navigating the Crypto Jungle. So how do you navigate this wild and wonderful world of crypto? The crypto market can be as unpredictable and wild as a dense jungle. Just like a hiker needs a map and a plan, you need strategies to survive and thrive in this environment. First and foremost, don't panic. The crypto market is known for its volatility. Prices can swing dramatically in a short period. It's essential to stay calm and not make impulsive decisions based on fear or excitement. Volatility is the name of the game. Second, do your research. Just as a hiker studies the terrain and weather conditions before setting out, you need to understand the technology behind cryptocurrencies, the market trends, and the potential risks and rewards. Understand the technology, the risks, and the potential rewards. Third, invest responsibly. It's crucial to have a clear investment strategy and not to put all your resources into one asset. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different cryptocurrencies and other asset classes to mitigate risks. Diversify your portfolio and never invest more than you can afford to lose. It's important to set a budget and stick to it. Only invest money that you can afford to lose without affecting your daily life. And finally, remember this. Crypto is a long game. Just like a long hike, it requires patience, endurance, and a long-term perspective. Don't expect to get rich overnight. Don't get caught up in the hype. The crypto market is full of noise and distractions. Stay focused on your goals, and don't let short-term fluctuations derail your long-term strategy. Stay informed, stay disciplined, and you'll be well on your way to navigating the crypto jungle like a pro. Keep learning, stay updated with the latest news and trends, and always be prepared to adapt your strategy as the market evolves.